Okay, so in respect to this chart, you sent this screenshot. I There is a concept called supply, demand and supply, supply and demand. Okay, I didn't teach those concepts because I wanted to make this class as simple as ABC. So I try to avoid unnecessary jargons related to trading. So I narrowed everything to the traditional or to the basic concept of support and resistance. Okay. In this chart, what I'm seeing is this is USD JPY. I will see if I can try to open it on a live market. I'm seeing a ranging market or a flat market for now. Okay, the market is moving in a box like this. Okay, so this is it. Let me just draw. So there is a level here where the market is approaching. There is also a level here. Okay, if the market break that level, it may try to reach this other level to see if it is going to reverse. If it breaks this level from here, it may try to reach this level that is here. Okay, so for now the market is moving within this range. Okay, so the market is moving like this. It goes up, down, up, down. It may go up from here, or it may break the level, then pushes up, or it may use here as resistance, then go down again. So it depends. That's why you need to be observing the chart, and those are the reasons why stop loss is very, very important. Okay, all right, so back to the concept of demand and supply. So if you look very well, this is a downtrend, right? The market pushes up from here like this, you can see. Now in this downtrend, there is a buyer entry at this level. You can see the bullish candlestick there. Buyers entered there. It created a new level of resistance. So the market respected the level here again, again, and again. Okay, so all the above areas that I just indicated are your entry points, especially if the major trend is a downtrend. Okay, you know, this is just a screenshot. I'm not seeing the overall chart. Okay, so except if it is especially if it is a downtrend, it means you can go with the buyers, the sellers. So for the concept of demand and supply, the demand zone is simply telling you that, let's say this is a bullish candlestick, okay, followed by a bearish candlestick. Okay, let's say you have some wick above these candles. Okay, now assuming this is a level, okay, and if you want to draw your demand zone, you start from the wick of the last candlestick that created the level, and then to the lower wick. So this is the concept of demand and supply. So in this situation here, Here is our demand zone. Here is our supply zone rather. The entire of this area is the zone of supply. Okay. While the entire of this area is the demand zone. So this is supply. This is demand. Okay. So it's just like support and resistance. The only difference is that you are looking at the last candlestick that is formed here, that created a level. Look at here, a bullish candlestick. Okay. And then we saw sellers entered. Now, in this situation, you are expecting sellers to enter from exactly this level. You are expecting the sellers to enter from this level exactly, right? But if you look carefully, the market goes up, hits that level, reversed. It almost touched the level and then it reversed. So if you are waiting for the sellers to hit this particular area before you open your position, you will see that you have missed this opportunity. Okay. So but if you draw the supply zone, you will notice that you have covered the complete area. You can see. Okay. And then if you look at it carefully, there is this is the bullish movement, right? Okay. Then from here, you are saying sellers are supposed to enter from that level, just like the way it happened here, like this. Okay. But without reaching this particular area like this, you are seeing reversal. Okay. This strong bearish engulfing candle confirms that the market wants to go down. It confirms the supply zone. Okay. It confirms the supply zone. Okay. So if you look carefully, the overall chart where the buyers enter, initially we saw strong buyers entry. Okay, we saw this strong bullish reversal, even though the market closed as a very strong, even though we are seeing strong sellers, like 3 bullish candlestick sellers, we saw immediately the buyers took over the market. Okay, and then pushed up. But along the line, we are seeing sellers in between. We are seeing sellers entry. A reversal here, sellers here. So that means that the chances of the market reversing from this area is high. Okay, so the market didn't actually touch the level before it reversed. Okay, so if you are just looking at the chart like that, you may not get the opportunity to open your trade. Okay, but if you draw the complete zone of supply, you can get good opportunity, okay, to open your position, knowing fully well that the market is going down from here like this. It goes up again. We are expecting that the market will go down. Okay, after seeing a weakness on the side of the buyers, followed by this strong bearish candlesticks, and then the market pushes down. So you can open a position for, you can look at this particular candlestick here. Sometimes you can take the fact that how long did it take the market to make this move. Okay, so this is 1 minute candlestick. For me, I may just count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like if it is 30 minutes, I will open the position for 30 minutes from this particular level here. From this level, I will open a 30 minutes position, expecting place my take profit here, because we're already seeing strong buyers at this area. So the chances of market reversing is only when the market hits this particular level. Okay, so I'm going, like I said earlier, I'm going to open this USD JPY pair on the live chart, because I'll try to see if I can find it. I'm looking at the time. Let me see the time you took this screenshot. Okay, it's not really that clear, but it looks like 1800. Okay, it looks like 1800, like that is 6:30 something p.m. Okay, so, and if you look carefully again, you can see that there is a level here. You can see where these sellers enter from. This level, if this market, if you can wait patiently, this strong bearish move, if you can wait patiently for this market to come back to this level again, the chances of getting a reversal is high. Okay, the chances of getting a reversal in the market is high. Okay, so that is just the concept of demand and supply. Okay, I'm going to explain it better on the live chat again so that you can see it clearly, because this screenshot you took is not really that clear, but it is explainable. So the only thing I can actually see here is just this box that the market is moving in like this. Okay, so like this, like this. So we can expect the buyers to enter from here again. Okay, so if you are looking at this chart, you have to pick out the overall market movement. Okay, you have to pick out the overall market movement like this. So this is the situation that I'm seeing here on this particular chart right now. So these are your entry points, especially here, especially this selling zone are your key entry points, because if you look at it carefully, the buyers are not actually reaching this level before they get reversed. The market reversed in the middle of the trend here, but maybe for this situation it may hit this level also before we can see any possible reversal in the market. Okay, so that is just it for this particular screenshot. So let me see if I can open the live market. Okay, let's see if we can open live market. So but for this situation, if you want to open trade for 1 minute, you can open trade at this level. There are chances of reversal here is very high, because you can see that strong buyers entry. This level again, you can see that strong buyers entry, and then this level is not really that strong, but you can draw this entire demand zone. Okay, and see. All right, so let's see the let's look at a live market. Let's look at this same currency pair on a live market and see if you can explain it a little bit further. And then I'm also going to try to explain from higher time frame, explaining to you how it works. I'm also going to reverse the 5 seconds time frame, 1 minute, 15 minutes. I'll show you all the situations, how the market moves. So if you are seeing a strong candle on a higher time frame, the chances of the market going down is high. Let's say, for example, now this is a daily chart. Okay, let me zoom in. So let's say this is a daily chart, and on the daily chart you saw this strong bullish bearish move here. Okay, and you saw, let's say you are looking at this situation on the daily chart. Okay, you can see an engulfing candle followed by this candle. So you know that, you just have it in mind that the selling pressure is going to be high, that sellers will still go down. So if you are going back to your 5 minutes time frame where you are supposed to open trade, okay, you are going to be looking out for positions to go with the sellers. Okay, so we are going to do what we call top-down analysis. Okay, so let's see a live chart. So I'm on the live market, and then you can see clearly that I've seen the chart. Okay, I've seen the particular pair you took the screenshot. This is USD JPY 1 minute candlestick time frame. Okay, so you can see here, these are the entry point I was telling you about, right? So this is the market movement. Okay, like I said, like this, like that. Okay, so now let's draw the supply zone. Look at the supply zone from the wick of this bullish candlestick, okay, to the wick of the next bullish candlestick. Okay, so this is our entire supply zone. Okay, so that's our entire supply zone. Okay, okay, so the entire of this area, the black line I drew, is the supply zone. Okay, so supply zone meaning that if the market gets to that level, you can sell. So you can see, if the market gets to inside this box, anywhere inside this box, you can sell off. Okay, so but the concept I'm going to show you again how you can sell is with confirmation. Okay, so let's say, because you cannot, let's say you are on this particular situation and you are seeing this chart at this time. You saw this move here, right? This particular move, bullish candlestick, and then again the sellers continued. Then this is a level of support. The market got support, got to that same level, and then you saw sellers again. So you have to wait, right, to get a clear market direction. Okay, so for this situation, you can see that the market goes up, right? It didn't go down direct, it made a type of channel while it is going down for the small situation here, and then finally again it goes up. Okay, again like this, and then you're now seeing a weakness in the sellers at this in the buyers at this particular area. Okay, look at sellers entered, right? So the next thing, you have to wait for a strong bearish candlestick like this. So you can see after that movement, you can see this strong bearish candlestick here, this particular bearish candle. You can see an engulfing candle. Okay, and also it broke the last level here, this particular rejection point. In fact, just an engulfing candlestick is good. Okay, now you have now confirmed that the market wants to go down. So you can see, you open your trade for maybe 30 minutes, 40 minutes, 1 hour. Okay, you can see the downtrend. You can see the market pushes down in similar pattern like that, because market moves in waves, right? Market move in waves. So that is the supply zone. So what about the demand zone? The demand zone, look at this particular chart here. That's the previous the last bearish candlestick here. Okay, for us to bring out the supply zone, the demand zone rather, look at this last bearish candlestick, the body of the entire body and the wick. You have to draw just from the beginning of the wick to the end of the wick. Okay, so this is our supply zone. As you can see, the market got to the zone, it reversed upward. Okay, so these are the concept of demand and supply. Okay, same thing as support and resistance. The demand zone is where buyers are expected to enter. Okay, and then supply zone is where the sellers are expected to enter. Okay, these are the supply zone. This area is the supply zone, and then this is the demand zone. Okay, demand. The entire of this area here is demand, and then above is supply. Okay, so let's quickly, and then finally again, it's just a reminder. Just know that for that particular moment the market was moving in a box. Okay, just like I already explained, for this particular moment you can see how the market is moving. Okay, eventually it didn't continue. We saw a breakout here after seeing a small, you can see another box here, another ranging market here. You can see even at this time again the market was still ranging. Okay, it's still ranging. It goes up and then finally breakout, got support, resistance rather, and then continue to go down again. You can see. So this is how the market changes its structure, direction, and whatever. So let's switch this particular candlestick to a 1 day. Let me just use this particular chart and explain everything. Let's switch it to a higher time frame, like 1 day. Okay, the daily chart. Okay, so you can see, just like I told you, all types of candlesticks, doji candlesticks, marubuzu candlesticks, hammer candlesticks, hanging man, inverted hammer, what more again, I didn't remember, spinning top. All these candlesticks occur on all time frames. Okay, irrespective of the time frame. So the movement is the same thing on 1 day, 1 hour, 2 hours, 5 seconds. Okay, it is the same thing. The candlesticks are the same. There is no difference. The only difference is that for a 1 day chart, you can see that this particular bearish candlestick is not a small move. This is a massive move in the market, this particular bearish candlestick. Okay, it is a huge move in the market. Let's draw the candlestick on its own from the wick, upper wick to the lower wick, and then open the chart and see. Okay, for 1 day, let's change it to 4 hours. You can see that it's not a small move. Let's change it to 8 hours. You can see. Let's see 30 minutes. So you can see for 30 minutes you can see the massive bearish movement. You can see this is it here for 30 minutes candlestick. This is it. Okay, so let's see for 5 minutes. Where is it? 5 minutes. Okay, you can see the massive move. Okay, let me show you. You can see this is the same candlestick on the daily chart. Okay, now let's go to 1 minute candlestick, which is the final one. You can see on 1 minute, cannot zoom out further. Okay, so you can see for 1 minute it is, you can't even see itself because of the size of the chart. Okay, because of the size, you can see. So you will notice that the move is a huge one. So let's go back to the daily candles chart and see. So look at the daily candlestick. So this candlestick is not a small move alone. If you have captured this candlestick like this candlestick have moved several hundreds of pips for the last 24 hours. Okay, and it looks like a Marubozu candlestick. Okay, so this is also a candlestick. Imagine this small red candlestick formed for just for a whole one day. But if you are looking at, if you study the chart very well, you can see that the chart moves similarly the same thing. There is no difference. These patterns occur even on 1 hour, 1 minute, and 5 seconds. The only difference is the time frame. Okay, so now let's see. You can see now that in this particular chart, this is an uptrend. Okay, you can see this is a minor uptrend, but after that bearish candlestick move, the market is trying to go down. Let's look at another chart where I can explain this proper. Let me see Euro US dollar currency pair. Okay, I'm still not seeing what I'm looking for. Let me see Australian dollar and US dollars. Okay, for 1 day. Okay, I may use this particular chart, but let me look at other options again. Let's see, there is something I want to explain. Euro JPY, nope. No, let me see this pair. Look at, imagine, you can see how bad the US dollar and Swiss franc, look at how bad the chart is. Look at what the market is making for every 24 hours. We are seeing several rejections. So this type of situation, if we are changing it to 1 minute candlestick, we may not see anything reasonable. Okay, because of so much rejection even on the daily chart. You can see this is an example of a bad market. Okay, where you are seeing so many wicks, so many rejections. It's not a good market. So if you are in the chart, you are not supposed to trade in this type of market. Right now the Asian session is approaching, or I think we might be in the Asian session. Okay, you can check the chart and check the time for the different trading sessions. All right, so if you look carefully, this is a very bad chart. This is not a good chart for a one, especially, okay, this is for a 1 minute candlestick. Sorry, this is not 1 day. Because I know that it's very rare to see such a situation in 1 day candlestick. So you'll be seeing too many wicks. Look at the candlesticks, a lot of wicks, a lot of upper and lower wicks. You can see, look at the wicks, and then you will now be seeing doji candlesticks, too many doji candlesticks in between. Look at, this is a bad market. So you are not supposed to take any trade in this type of situation. You can only take trade in a trendy market, in a good market, a market that have clear levels of supports and resistances. Okay, a market that have clear level of support and resistance, demand and supply, all those that is making clear patterns, channels, and the rest, and the market is also producing healthy candlesticks. Okay, the market is also producing healthy or making healthy candlesticks. That is the only type of market, that is the type of market you are expected to trade. Okay, let me show you. You can see. So if you are in this particular type of situation, you can trade in this type of market. Okay, where you are seeing clear scenarios of support and resistance, demand and supply, clear charts, patterns, engulfing candle is working, head and shoulder patterns, all those things. Okay, so if you are not spotting them in the market, that means the chart is a bad market. you are supposed to leave the chart. Okay, so this is the Asian session. You can see the spread now is very high, so you can't even open trade in this type of situation. Okay, you cannot open trade in such a situation. So you take trades only in a healthy market, in a good market where the market is trendy, just like you can see in this chart now. You can see that this is a trendy market. At least you can be able to predict the market in this type of situation. Okay, but when the market is making too many wicks, you cannot predict. Like in this situation here, you can't predict in this particular situation. This is not a good market. Okay, that is not a good market, and you can see this is a good market. Okay, you can see the downtrend is clear, the uptrend is also clear. You can see okay, so still on the analysis, let me go back to, let me see if I can see the previous pair that I checked so that I can use it. I think that was the best one I saw. That is AUD USD. All right, so looking at this last candlestick here that just formed, you can see this particular candle here. This one was the last candlestick that has been formed. This is the next candlestick. Okay, so this was the previous day's candle. Okay, now let's say you are in this particular chart where this market, you have seen this particular candlestick now. Okay, and looking at this situation, it is a clear reversal pattern. Right now the market wants to change its direction. How do I know? Look at, you can see that this is the next market situation. Okay, so you can see the next market situation. Okay, so initially it is going up, the market was going up, the uptrend started from here like this, it started moving like this. Okay, so look at, but in this particular, at this time, you can see the clear chart. Okay, look at, this is the next market direction. Okay, so the next level we are expecting this market to reach is here before we can expect any reversal, and we are already seeing a very strong bearish candlestick. Okay, so if we switch this chart to a lower time frame, okay, like let's say a 4-hour time frame, you will see that it is a clear downtrend. So this is what some people call top-down analysis, where you analyze the market from a higher time frame down to a lower time frame. Okay, so from the way I analyze it, if I see a healthy candlestick that is going down from the, or it is either going up or down, I can use it to predict the future market on a lower time frame. Okay, because it is also going to go down. So let's see 30 minutes. So you can see for 30 minutes it is a clear downtrend. Okay, so you can see that it is a clear downtrend. Let's say, let me just go for 1 minute direct. So you can see the downtrend is very clear. Okay, so for the last 24 hours the market was going down. Okay, so this is a 1 minute candle. Each candle here represents 1 minute. Okay, how many minutes do we have in an hour? We have 60 minutes. And how many hours do we have in a day? We have 24 hours in a day. Okay, so you can see the number of candlesticks that have been produced for just for the 1 minute. So if you are switching it to a higher time frame, let's go to 5 minutes, the candlesticks will be reduced. Why? Because you can see it is bolder now. Because it is a 5-minute time frame, it is still a downtrend. It is going up. Change it to 15 minutes. So you can see a clear downtrend. This is 15, okay, sorry, it's 15 seconds. This is 15 minutes time frame. So you can see this is 15 minutes. You can see it is still a downtrend market. You can see, look at the chart we drew from 1 day. You can see that it is still a clear downtrend. So let me see for 30 minutes. So you can see a clear downtrend. Why? Because on the daily chart, the last candlestick was a bearish candle, a very strong bearish candlestick. So every other one will follow suit. So that means if you want to open a position for even for a lower situation, you can choose to go with the trend, which is a downtrend. Okay, this is for 1 hour. This is for 4 hours. You can see 8 hours. You can see that it is a clear downtrend. This is 8 hours candlestick. So let's see for 12 hours, which is the last one before 1 day. So you can see, and then for the daily chart, so you can see, look at this situation very, very well. Look at this small situation here. You can see these two candlesticks. You can see small wicks, right? You can see the wicks rejection on the daily chart. But if you are switching it to the 12-hour chart, because it is shrinking, you can see a lower time frame. So this is the rejection point now. If you are going to look at it from the level of, from the lower time frame, okay, these are the rejection points. This is the rejection. This is where the body of the candle is. Okay, let me draw it. You can see this is the body of the candle, and then this is the rejection point here. So let's switch to 1 day. So you can see clearly. Okay, so in this chart, in this particular chart, if you switch it to 12 hours, you can see that here there is a buyer's entry at this particular zone. So we can actually expect buyers to enter from this level here. You can see. So we can expect buyers to enter from here. Why? Because the buyers enter from this particular zone. So we can expect at least 1 or 2 buyers here. Or maybe the market may even shoot up to from here to this level before it goes down again. But I doubt if the market will get to this particular resistance, because it may just, because there's what we call retracement candlesticks. The market will retrace because of small levels. Okay, it may make small reversals or what we call retracement as a result of minor levels in the market or in the chart. So this is a minor level. Okay, for the next 12 hours, the chances of seeing a candlestick, a bullish candlestick here is very, very high. Okay, because of this level. You can see it was a support level here, it was a resistance level. Okay, so as a result of this level, we can expect buyers to enter here. It is a minor level, but that doesn't mean that maybe the market may go up to that level. sometimes you will look at the strength of the buyers that enter from the particular level here like this. So you can see we have strong bullish candlesticks that enter, but upon reaching this level they reversed before like this. Okay, so we may see a retracement candle, maybe one or two candlesticks, just like the way we saw here. Let me show you again. Just like the way we saw at this particular zone. So if you look carefully, the market is respecting the levels or the zones. So it is very likely, look at here, this sellers enter, and then we saw strong buyers enter at that level, right? So when the strong sellers get to that level again, you can see one bullish candlestick, buyers entered. Okay, because of the level, because of the zone. So the same may happen here. Because of this particular level, we can expect the buyers to also, we can expect maybe one or two bullish candlesticks here. Then the downtrend will continue. Okay, it may move like this. And then downward. Okay, so the fact that the buyers are going to enter at this particular time doesn't mean that the trend is going to change. No, the fact that you may see bullish candles here, because the market move in waves like this. It goes up, it goes down like that. Okay, it goes up and down. So we can call those are retracement candlesticks. They occur as a result of minor levels in the chart. The only area we can expect to see a strong or complete reversal, it may be from this particular zone here, because this is the clear level of support here. So if this chart gets to this particular level here, we can expect a complete reversal to this same level, to the resistance. Okay, so let's see, let me change it to the 1-day chart. So if you are looking at the 1-day chart also, you can see that there is a pullback or a rejection at this particular zone. Okay, there is a rejection here on the 1-day chart. Okay, so the market may go up a little bit and then reverse again because of this particular rejection zone. It may close as a bullish, it's going to go down as a bearish candlestick, because this is the next support. Okay, this level here is the next level of support, so we can expect reversal from here alone. Okay, so this is how it works. Okay, so if you are on a higher time frame, you can expect the market to behave the same way in the on the lower time frame. So if you are looking at this particular chart here now, you can see that this is the market situation. Okay, you can see this is the market situation. The market was moving like this. Let me just start from here. It goes up, enter this zone like this. Okay, so this is the next level. From here we can expect, from this trend line we can expect market to move here, or it may reverse from here. Okay, but ideally this is the situation. It is now moving in a channel on a daily chart, you can see. So if you are going to use this to open a position, you just can open a position for maybe 2-3 hours, or until the market completes its channel, looking at it from the higher time frame. Okay, so all these situations can be formed even on the lower chart, like the 5 seconds. Okay, so if you are trading on 1 minute, you can use 5 seconds to confirm your entry point. If you are trading on 1 hour, 15 minutes, you can use 5 minutes to confirm, just like I'm using 12 hours now to confirm for the daily chart, like I showed you earlier. Okay, all right, so what am I? Okay, 5 seconds. Let's go to 5 seconds, or 1 minute first. Let me open 1 minute pair and then show you. Okay, all right, so this is our 1 minute chart. Okay, this is our 1 minute chart, and I'm looking for a clear. Okay, um okay, perfect. All right, so if you look at this 1 minute chart, there is the level of our resistance, support is here. You can see support level is here, so we can expect the market to reverse from this same level also. Okay, so if we are to draw this level, let me draw it and wait for the market to hit the zone of that support. Then we can switch to 5 seconds. So you can see, let me show you that even though we are seeing a strong bearish candlestick, but this is not a good chart. Like I told you, you can see so many doji candlesticks because of right now the market is very bad, and this is Asian session, so that's why we don't really do much activities on the Asian session. Okay, so because it is 1 minute or 5 seconds. In fact, if you open the 5-second chart and you see that the candlesticks are healthy, clear and moving very very well in 5 seconds, you can now realize that okay, this candle that is going, you will realize that the market is very good. So but if you open 5 seconds now, you are seeing so many doji candlesticks, just like the way you are seeing right now. This is a 5-second chart. The market is bad. Okay, but I'm still going to explain. So now this is a strong bearish candlestick, right? And then followed by another bearish candlestick, right? But at the level, we are seeing a spinning top candle. Okay, the sellers cannot push further. Then followed by a bullish candlestick, again a bullish candle, a strong bullish candlestick. So you can see that the market reversed. So you can see this is a reversal sign. It's green spinning top candle after a strong selling pressure. Okay, you can see the market goes up. Okay, let me change here again to 5 seconds and see if there is a clear reversal signal there. I didn't use it because it's not really that clear. You can see so many doji. You can see this is a bad market. You can see doji candlesticks everywhere. Look at, you can see everything is a doji candlestick. Look at so many wicks. So this, you need to be able to spot good markets and bad markets. Okay, so you don't trade in this type of situation. If you come into the market, you open your chart and you are seeing some things like this, please leave the market. Okay, just quit trading for that moment. That is to tell you the activities of buyers and sellers have been reduced. Okay, it has been reduced. Let me find another. Let me see. Okay, This is a level actually. So the sellers close at that level. Now, but if you look carefully, you can see that we saw an inverted hammer. So look at an inverted hammer, a bearish inverted hammer, yet the market goes up. Okay, so and this time around we are now seeing a more stronger confirmation at the level, a bullish inverted hammer. Look at, so you can see these two situations, they are the same. You can see reversal, the market reversed. Okay, you can see from here the market reversed, from here again the market reversed. Okay, after spotting the same thing, you can see they are the same, there is no difference. In fact, this one is more stronger here because it is a bullish inverted hammer. Okay, so let's see the 5-second chart if there is a confirmation candlestick on it. Okay, same, I didn't. Okay, I'm coming. All right. So you can see it is because of the 5-second, it is down below. Okay, so because of the market is bad, there is no, you can see there is no clear confirmation on 5 seconds. Okay, so but you are not using 5 seconds, please. You are only using 5 seconds sometimes to confirm your position. If you are trading on 1 minute, you are only using 5 seconds. You are looking at the 1 minute chart, not the 5 seconds chart. So if you are seeing a strong resistance level on 1 minute, you can draw your level, switch it to 5 seconds, and then if you see a confirmation entry, you can open your position. But in this situation, the reversals are very clear. You can see the reversal is clear. Okay, you can see it is clear. Look at, this is a reversal sign, this is also a reversal sign. Okay, so is this an evening star pattern or a morning star pattern? Okay, so you can see that this is a morning star pattern, this is also a morning star pattern. Okay, after spotting the first morning star pattern, you can see reversal. Again, you are now seeing a morning star pattern, then you can expect the same market to reverse, especially the inverted hammer there is a bullish one, a stronger confirmation. Okay, so in recap, pay attention to good markets that are trendy. Trendy means it is either it is clearly going up and it is clearly going down. Okay, you are seeing clear levels of support and resistance. You are seeing clear patterns in the market. Channels are forming, bullish flags, bearish flags, all of those things, head and shoulder, double tops. Okay, like that. And then make sure the candlesticks are healthy. By healthy candlesticks, I mean let there be no much rejections in the candle, or else it is a bad market. Okay, so when there is no much rejection, the candlesticks are making clear, they are very healthy. You can see now this situation, these are not healthy candlesticks. You can see what I'm talking about, healthy candlesticks. Okay, these are not healthy candlesticks. Okay, because you are seeing so many wicks and so many doji candlesticks there. Okay, so if you spot a market like this, you can see that okay, this particular candle, these are healthy candles. Okay, so in this situation, you can see these are healthy candlesticks. So this is a very good market. You can see that in this type of situation, you can easily predict the market direction because it is clearly going up and it is clearly going down. Okay, so I believe I've done justice to this topic. Sorry, to your question, the question you raised, and then I've been able to explain further using the top-down analysis. Showed you the 5 seconds charts and how you, again, because I've showed you in our previous classes, okay, just for further verification. Okay, so you can see this is the 1 week chart. Okay, for this particular situation, you are seeing an uptrend in the 1 week candlestick, so meaning the market will continue to go higher. Okay, you can see this is an engulfing candlestick. Let me show you. And see, this is an engulfing candlestick, a bullish engulfing. After that, you can see buyers continued. You can see for the next 3 weeks, it was a clear uptrend. So this type of situation, you can also spot it in a lower time frame. Okay, you can spot this type of situation also in a lower time frame. As you tell you, the candles are the same. So if you are now seeing this type of situation in a higher time frame, you should know that the buyers will push the market higher. So whatever you do, you can be going with buyers. You can see this is a strong candlestick, an engulfing candlestick. This was the previous candlestick, right? Expect buyer again, expect buyer, expect another buyer. For the past, you can open this position for another 2 extra 1 week alone. If you capture this particular 1 week candlestick, you are done. There's no need, there's no rocket science, it's not there's no two way about it. Okay, it's all right. So further questions, please just forward it to my WhatsApp. Okay, please make sure you are studying this thing the right way. Go back to the last video where I showed you how to open a trade on 5 seconds. Practice it. Once you are seeing results, don't spend more than 1 hour on the chart, at most 2 hours practicing and studying and trading. Okay, make sure you see a clear signal before you open any position, please. With that, you'll be seeing improvements gradually. Okay, it's all right. So take care. So just forward all your questions to WhatsApp, please. Thank you very much. Good night.